Hello from Cboe Global Markets. I am Kevin Davitt, and this is your Vol 411 for Tuesday, June 4th. The headline-driven market moves continue as rhetoric on both the Chinese and Mexican tariff front appear to be thawing ever so slightly. There were conciliatory tones from Beijing and the AMLO camp in Mexico City overnight last night. Now, as I stand here, the SPX is higher by about 0.9% to 2770. The index traded right up to its 200-day simple moving average at 2774 and failed. I, for one, will be keeping an eye on that level for potential support or resistance in the coming sessions. The VIX Index is declining and currently measures around 18 even. The VIX term structure has been quite steady in recent trades, so despite the daily gyrations higher and lower, the forward-looking volatility expectations have remained quite steady. Understanding that VIX futures tend to be less sensitive to shifts in the index is important. Also understanding that the further out the VIX curve you go, the less sensitivity that they tend to exhibit, that's also important. Of late, that's translated into a persistently flat VIX term structure with essentially June through November futures oscillating slightly above and slightly below 18 on a day-to-day basis. The at-the-money 18 strike straddle is trading around 3, which forecasts a June VIX futures range of 15 to 21 over the next couple of weeks. The June 25 calls have been trading actively this morning with about 15,000 on the tape against an open interest of nearly 320,000. Fed speakers have been making their rounds and they're in Chicago for a conference today. The odds are now skewed in favor of a cut at the July 31st meeting with a significant potential for another before the end of 2019. I don't know what that says about the U.S. and global economy. That's your Vol 411 for Tuesday, June 4th. Thanks for tuning in.